Buenas tardes a todos, mi nombre es Joseph Antonio Malambo. El día de hoy les voy a compartir este artículo en inglés que tiene que ver con las normas internacionales de información financiera NIF, el impacto que tiene el desarrollo financiero y desigualdad del ingreso en diferentes países. Este es un estudio empírico que utiliza el análisis de medición. Vamos a empezar. En este caso, income inequality continues to be an issue of concern. Early work on economic development suggested that as a country's economy grows, incomes would rise and reduce any income disparities. However, there is growing evidence that as a country develops, income inequality actually worsens. Some studies argue that this is the result of financial development and the growth of the financial sector. Although there is a good deal of empirical research on the relationship between financial development and income inequality, there is no prior work that examines how accounting standards, in particular International Financial Reporting Standards (IFRS), might influence this relationship. This study examines this relationship of IFRS and financial development with income inequality using mediation analysis over the period from 1998 to 2018. These results indicate that the impact of IFRS on income inequality is mediated by financial development. Moreover, this is a direct relationship between IFRS and inequality. Introduction. Countries have long seen growth of their economy as a vehicle for reducing income inequalities. A country's economy can be dichotomized into its real and financial sectors. While these sectors are seen as distinct, the development of the financial sector does impact the real sector as it provides financial resources for projects that will impact the availability of goods as well as the level of employment. This reallocation of financial resources will result in creative destruction, as financial resources will be channeled to projects with better returns and away from others. For this creative destruction to provide the maximum benefit to a country's overall economic development, it is critical to have an efficient, efficient financial infrastructure. The optimum result stems from the efficient reallocation of resources to those projects with the greatest potential return. This reallocation will impact income inequality as certain groups benefit from these new opportunities, while groups in discontinued projects do not. To support the efficient reallocation of financial resources to productive investments, investors require access to high-quality accounting information about these investments. Literature review: Indirect effect of IFRS on income inequality through financial development. One of the consequences of financialization has been the creative destruction of firms, as resources become reallocated from less productive investments towards those that are more productive. For this creative destruction to provide the maximum benefit to a country's overall development, it is critical to have an efficient Financial system. An efficient financial system allows for the efficient reallocation of resources, which will enhance incomes for those employed in new opportunities, while there is a reduction in the incomes of those in discontinued projects. Investors require high-quality accounting information in order to efficiently reallocate financial resources. One of the major objectives of high-quality accounting standards, such as IFRS, is to provide investors with such information. Standard setters argue that access to high-quality accounting information in general, and IFRS specifically, can improve investors' economic decisions. There are numerous studies that examine examine the relationship between financial development and income inequality. The result is a reduced spread between domestic and foreign cost of capital that stimulates financial development, which in turn would promote economic growth. Therefore, an effective financial reporting system which produces relevant and transparent accounting information for investors will impact financial development and economic growth. The accepted argument for creating internationally used high-quality accounting standards and an effective financial reporting system is that they should improve the transparency and comparability of financial statements and reduce information asymmetry, benefiting investors. The development of IFRS was seen as a way to provide such a set of international accounting standards. IFRS's conceptual framework specifically mentions these as its create general-purpose financial reporting. Further indicates that the standard should increase transparency and enable investors to make economic decisions. There is evidence of these benefits to IFRS adopting countries as its use lowers risks due to reduced information asymmetry, which increases liquidity and it decreases the cost of capital. These combined effects lead to greater availability of capital. There is also evidence that these benefits improve international capital flows. The introduction of IFRS as high-quality accounting standards is perhaps more important to foreign investors as financial information becomes more um, comparable. This empirical evidence seems to support that IFRS continues to meet the objectives of its conceptual framework. Direct effect of IFRS on income inequality. The previous section shows that much of the discussion concerning the proposed value of IFRS as common financial reporting standards is centered around the benefits to investors, with no mention of other stakeholders. Clearly, the emphasis of IFRS as stated in its conceptual framework is on financial statements and the firm's financial performance. Six, are the role of accounting and accountants in sustaining and legitimizing reported income and economic inequalities has not received adequate attention, although accounting systems are central to the calculation of compensation, and taxes. Rather, the accounting profession focuses on helping businesses to control costs, including labor costs, promote competition, profits, and efficiency while facilitating the inequitable distribution of income and wealth. The reduction in tax revenues, which is partially the outcome of consultancy services rendered by accounting firms to their clients, adversely affects disposable household incomes by reducing social and transfer payments. The focus of IFRS income measures is increased when costs are reduced, one of which is labor. One threat to measures of corporate profitability is labor, which again shows corporate value being considered primarily from the perspective of investors. The IFRS role in reducing agency costs ignores that the role of employees in increasing wealth. The needs of other stakeholders are considered only after investors' information needs are satisfied. Finally, there is evidence that the adoption of IFRS improves the comparability of financial statements. Thus, with the improvement in comparability, employees may also use financial reports of similar firms in order to identify the earnings potential and how their companies have done in comparison. This is important because negotiations with their companies on job-related issues can be based on information they have collected from the high-quality financial reports of comparable firms. The above discussion suggests that the IFRS may also have a direct effect on income inequality. Data and methodology. Data. The data is our sample in our sample include observations from the period uh, 1998 and 2018 for countries that are classified into three groups determined by the International Monetary Fund. Advanced economies: first, second, emerging markets economy, and third, low-income economies. Macro and socio-economic data were obtained from the World Development Indicators. Governance indicators were downloaded from the World Governance Indicators. The Financial Development Index database was extracted from International Monetary Fund. The methodology. The discussion in the previous section suggests that IFRS has both indirect and direct effects on income inequality. As an indirect effect, IFRS is expected to affect income inequality via financial development line A, which in turn is likely to influence income inequality line B. To put it differently, the effect of IFRS on income inequality is mediated by financial development and is the product of these two effects. And finally, the conclusions. Multiple studies have shown the association of financial development and economic development. Early works argued that economic development should reduce income inequality. as the benefits from an expanded economy will be distributed to all stakeholders in a country. However, this result has not been universally accepted. In addition, a number of studies have looked at the direct impact of financial development on income inequality. The role of financial development in economic development is supported by information about potential investment opportunities as the movement of capital to the most productive projects is critical. The IFRS conceptual framework specifically mentions its ability to provide quality information to investors and lenders, and to increase transparency. Thus, the adoption of IFRS should support financial development by providing improved information about investment opportunities. Our findings show that both financial development and the adoption of IFRS reduce income inequality. This study extends the investigation of income inequality by examining whether financial development mediates the impact of IFRS on different measures of income. Moreover, we find that for market income inequality, the mediation is complete, whereas for this disposable income inequality, the mediation is partial. This may be due to government transfer payments and tax policies that increase disposable income. Our results are confirmed that the impact of IFRS and measures of financial development on income inequality depends on the country's level of economic development. The results also show um, the benefit to countries that use high-quality financial reporting standards as we have evidence of their direct impact of reducing income inequality. Finally, our results also show the additional benefit to countries that create a financial infrastructure capable of making efficient use of these accounting standards. And this also uh, reduces income inequality. The study contributes to discussion of accounting standards as a tool to improve transparency and liquidity. However, we also demonstrate demonstrate that the benefits of high-quality accounting standards do not accrue to all stakeholders. As with any study, there are both implications for additional research and issues that may limit the interpretation of the results. Clearly, additional research could look at the role that accounting standards play in different types of political settings. Two issues need further investigation. First, different types of IFRS have been adopted. These different differences combined with a country's real reliance on the different financial institutions may result in different impacts on country-level income inequality. The second issue is the role that poli- political institutions play in the choices of financial intermediaries and how these choices impact the IFRS. The association with income inequality. One of the limitations of this study is the availability of data. While we rely on the World Bank and the IMF for much of our data, there could be issues in relation to how income is measured. For example, uh, There could be a difference between income and consumption inequality as certain countries have safety nets for their citizens that other countries do not. Bueno, hasta ahí fue el artículo, es un resumen como tal, lo que me parece como más importante. Bueno, lo que viene a decir ese artículo, el estudio investiga la compleja relación entre la adopción de las normas internacionales de información financiera NI y el desarrollo financiero y la desigualdad de ingresos a nivel global. Esto fue un estudio basado entre los registros de información de los años 1998 y 2018, aunque el artículo es del 2023. Entonces, digamos, viene a hacerlo a través de un análisis empírico. Los autores exploran si esas normas afectan directamente la disparidad de ingresos o si su impacto se produce directamente a través del desarrollo del sector financiero. Y bueno, los hallazgos sugieren, que eso fue el último que leímos, que si bien existe una conexión directa entre estas normas internacionales y la desigualdad, el desarrollo financiero actúa como un medidor significativo en esa relación. Además, la investigación considera las diferencias en los efectos observados entre países con distintos niveles de ingreso. Los objetivos principales fueron investigar si existe un impacto directo de esas normas con la desigualdad. También eh, analizar la relación entre ese desarrollo financiero y la desigualdad de ingresos en los países que adoptan estas normas. Asimismo, entonces, estudiar esa misma relación de acuerdo a esos grupos de países según su renta per cápita. Bueno, y el artículo también como tal nos viene a explicar, digamos, que estas normas tienen un impacto en la desigualdad de los ingresos. Pero la medición completa de esa desigualdad de ingresos en el mercado podría ser parcial para unos países y total para otros. Y los que adaptan, pues en el estudio también también venían pues con los resultados, decía que los países que adoptaban este tipo de normas tenían una mayor capacidad, ya que podían acceder a información mucho más confiable financiera o información contable, una información estándar contable mucho más, eh, mucho más verídica, ¿sí? Para tomar mejores decisiones que los países que no tenían esta posibilidad o que no adoptaban estas normas como tal. Esos resultados muestran que el beneficio para estos países que utilizan estas normas es muy alto porque evidencia un impacto directo en la reducción de la desigualdad de los ingresos y también muestra un beneficio adicional para esos países que crean una infraestructura financiera capaz de hacer un uso eficiente de esas normas contables, ya que eso también reduce la desigualdad en este caso. Bueno, espero que les haya gustado, me parece un tema muy interesante. Muchas gracias.